Have you ever wondered why people panic when the rupee falls against the dollar? News headlines say things like, rupee hits all-time low, dollar becomes stronger, RBI intervenes. But what does any of this actually mean? And more importantly, who really decides the value of the Indian rupee? Is it the Indian government, the Reserve Bank of India, America, or some hidden global system? Because think about it, a few years ago $1 was around 60 rupees. Today it's much higher. So what changed? Did the dollar become stronger? Did the rupee become weaker? Or both? Today we're going to understand this entire system in the simplest way possible. And by the end of this video, you'll understand why the dollar is so powerful, why the rupee keeps changing, why petrol prices rise when the rupee falls, why RBI interferes in the market, and whether India can ever challenge the dollar. So let's start from the very basics. Imagine a market where people are buying apples. If apples are limited but buyers are many, apple prices go up. Simple demand and supply. Currencies work almost the same way. The dollar is basically a product in the global market. If more people want dollars, the price of the dollar rises. And when the dollar becomes expensive, the rupee becomes weaker. That's why instead of saying, the dollar became expensive, people often say, the rupee weakened. Now the next question is, why does India even need dollars? Why not use rupees everywhere? Because international trade mostly happens in dollars. If India wants to buy crude oil from another country, payment is usually made in US dollars. If an Indian student studies in America, fees are paid in dollars. If Indian companies repay foreign loans, they often need dollars. So India constantly needs dollars. And this creates demand. Now imagine something happens in the world. Oil prices suddenly rise. A war starts. Global investors become scared. What do investors usually do? They run towards safer assets. And historically, the US dollar is considered one of the safest currencies in the world. So during global fear, people buy more dollars. More demand. Stronger dollar. Weaker rupee. This is exactly why global events affect India's currency. Even events happening thousands of kilometers away. But wait. If dollars only leave India, then where do dollars come from? Good question. Dollars enter India in many ways. First, exports. When India sells software, medicines, engineering products, textiles, or services to other countries, foreign buyers pay in dollars. India earns foreign currency. Second, IT companies. Indian tech companies work with clients around the world and earn billions in dollars. Third, NRIs. Indians living abroad send money back home. That also brings dollars into India. Fourth, foreign investment. When global investors invest in Indian stocks, startups, or businesses, they bring dollars into India. So now you can understand the balance. If dollar demand becomes higher than dollar supply, the dollar becomes expensive. If dollar supply increases, the rupee can strengthen. Now, let's understand something extremely important. Why does crude oil affect the rupee so much? Because India imports a massive amount of crude oil, and oil is usually bought in dollars. So if oil prices rise globally, India needs more dollars to buy the same amount of oil. This increases dollar demand, and that can weaken the rupee. Now you understand why petrol prices and the dollar are connected. But here's where things become even more interesting. Does the RBI control the dollar rate? The answer is not directly. India follows something called a managed floating exchange rate system. That sounds complicated, but it's actually simple. The market mostly decides the price. But if movements become too extreme, RBI may interfere. For example, if the dollar suddenly becomes extremely expensive very quickly, RBI can sell dollars from its foreign exchange reserves. This increases dollar supply in the market, and that can reduce panic. Similarly, if the rupee becomes too strong too quickly, RBI may buy dollars. Why? Because an extremely strong rupee can hurt Indian exporters. So RBI's goal is usually stability, not a fixed number. Now let's talk about something people often misunderstand. Is a weak rupee always bad? Not necessarily. Yes, a weaker rupee can increase import costs. Imported electronics may become expensive. Foreign education becomes costlier. Travel abroad becomes more expensive. Inflation can rise. But there's another side. Indian exporters can actually benefit. Suppose an Indian company earns $1 million from exports. If the exchange rate changes from $1 equals 80 rupees to $1 equals 85 rupees, the company gets more rupees after converting the same dollar income. That's why many IT companies benefit when the dollar becomes stronger. So currency movements create both winners and losers. Now let's answer one of the biggest questions. Why is the US dollar so powerful globally? There are several reasons. The United States has one of the largest economies in the world. Global trade heavily depends on the dollar. Many countries keep dollar reserves. Oil trade is largely dollar-based, and global investors trust US financial markets. Because of all this, even countries that are not connected to America directly still depend on the dollar system. That's why when the US Federal Reserve changes interest rates, currencies around the world react, including the Indian Rupee. Now imagine this situation. The US increases interest rates. American bonds suddenly give better returns. What will many investors do? They may pull money out of countries like India and move money into US assets. So they sell rupees and buy dollars. Again, dollar demand rises, rupee weakens. This is why even decisions made in America affect ordinary Indians. Now let's discuss a common myth. Can India completely replace the dollar? Right now, it's extremely difficult. India is growing fast, but replacing the dollar globally would require massive trust in the rupee, much larger international usage, stable long-term financial systems, deep global trade integration. Some countries are trying to reduce dollar dependence. India is also increasing trade in local currencies with some nations, but the dollar still dominates the global financial system. Now let's bring this down to everyday life. Why should ordinary people care about the dollar-rupee rate? Because it affects daily life more than most people realize. Petrol prices, flight tickets, imported phones, laptop prices, foreign education, online subscriptions, inflation. Even if you never buy dollars yourself, the exchange rate still affects your life. And finally, what's the ideal situation for a country? Not an extremely weak currency, not an extremely strong currency, but stability. Because businesses, investors, and consumers all prefer predictable markets. And that's why RBI keeps monitoring the market carefully. So the next time you hear rupee falls against dollar, you'll understand that this is not just about currencies. It's connected to oil, global trade, investments, wars, interest rates, and the entire world economy. And that's what makes the dollar-rupee story so fascinating. If you enjoyed this video, subscribe for more simple explanations of economics, geopolitics, and global finance.